Hey guys, welcome back to the channel. Today we're conducting some more SOFI stock analysis, and I'm going to show you today why this stock could hit $30 per share at least in 2022. So if that sounds like something you're interested in today guys, please consider subscribing to the channel, smashing that like button, and I'll catch you in there. Hey guys, welcome back into the video. So we're conducting SOFI stock analysis in that it can reach $30 in 2022. And there's an article released by Will Ashworth 4 days ago on Investor Place that I wholeheartedly agree with. This has been named as one of the best cheap stocks to buy under $20 in 2022, and the fact that it is now at $13 to $14 a share, that just I liked it at $20 a share. That just makes my buy conviction even higher on it. Fintech stocks and growth stocks have been absolutely hammered right now. SOFI was no exception. So that will eventually peter out, and I believe that it will come back strongly. So as he said here, owning the stock is one to just keep hold of at the moment, or average down your position if you can. Despite the naysayers, he liked the stock at 18 and likes it even better at 14. I'm completely aligned with that. As long as the membership keeps growing, which is exactly what has been happening at the moment, then the revenue will keep streaming upwards as well. So the biggest catalyst for this company will, if you're a SOFI investor, this will not surprise you, is the acquisition of Golden Pacific Bancorp. What might surprise you is that the revenue adjustment, when that bank charter gets satisfied and they can go through, their revenue will take the EBITDA will take a 25% bump upwards, which is absolutely huge and will value the stock better in that way. 9 analysts who cover the stock said that it will break even in 2023 with the average price target of $24 and a high of 30 and a low of 19 respectively. So there is where the article goes for its double. The bottom line on this stock, even though a Rosenblatt Securities analyst Sean Hogan lowered his 2022 revenue by 3% to 40 million due to the student loan expansion, and trimmed his price target by $2, he still considers it a very high conviction buy. That to me is irrelevant. The price target that it's at now just makes it a buy. Whether the price target is $26, $28, $30, either way, if you're holding for the next 12 months or 3 years or longer, this stock is going to 100% reward you, and that I have absolutely no doubt about. Taking a quick look at the stock chart over the last year, you can see that it has bumped its way up to approximately $23, $24 a share 3 times in the last year, and I believe that will again happen when the bank charter gets confirmed. The stock will tick its way back up that way. That will still mean there'll be no point for me to sell at that point. I'm still holding long term, but some people may trim their positions at that point, which we might make it come down just a little bit in the meantime. The market cap is currently sat at about $10 billion, which for such a fantastic high growth revenue generating company is an absolute bargain in my opinion. And we've already had a look at the company's analyst ratings there, and its current share price is sat well below even the lowest analyst rating. Looking further into this, we can see that there's an article here on Seeking Alpha that is going into a bit more detail about the bank charter approval and its implications. So the investors are still in line with everything else. A lot of growth stock investors are just selling no matter what the cost, and that for me is good because I can hoover up cheaper shares, but obviously it's hammering the share price. The stock trades at now a 40% discount from its overall highs, and that is an ideal entry point for me. But the bank charter approval could mean deeper, higher profits and better returns for us investors. So getting through, I can't read the whole article for you, but I can quickly show you exactly what's going on. Revenue growth rates have just started to pick back up again. Quarter 3 it was 35% growth. Quarter 4 is projected to be 55% growth or better, which is obviously great news. It's important on 2 coats. It's still double-digit growth, and it still will contribute to the whole year's annual growth. Quarter 3 wasn't obviously the best quarter, but it re-picked it back up in quarter 4. So this is how SOFI is going to line up in 5 years' time. At the moment, it gets a lot of its money from lending out cash, and then its tech platform, and then its financial services are quite a small sector here. By 2025, it hopes that the financial services sector is going to be 32% of its revenue and trim back the lending side of things to 43%, despite being 3 times higher than it is in 2020, which is absolutely fantastic. And then the tech platform is boosting its way out 10 times as much as well. That's absolutely huge. And the reason for this projected thing is the flywheel effect that happens from people getting involved in the SOFI ecosystem. So they join to do one thing, whether that be SOFI Bank, SOFI Invest, and then they decide to actually open up a SOFI credit card, an investing account, a savings account, a current account, a checking account. All of those sort of things just keep one customer in the system and just generate revenue off them every single one of those options that are available. And that is why I believe so highly in this company. There are some profit margins that are slowly improving from 2019 through to 2022. As long as it keeps on that trajectory, that is an absolutely bargain in my opinion. So again, it's so cheaply priced for this very reason, the potential impact of the bank charter that we've spoken about already. 2021 EBITDA is considered to be 42 million. If the charter gets approved in 2022, they reckon they can generate 254 million base case and then an extra 193 million from the adjusted bank charter, generating 447 million in EBITDA total, and then growing on to 718, over $1 billion, and then 1.4 billion in 2025. The key thing to notice here though is that the company is still projected to grow at a phenomenal rate even without the bank charter. Now everybody widely expects this to be approved. We're just waiting any day now, and a lot of people genuinely do think that it's going to be approved around when the Super Bowl is, because that's going to act as 2 massive catalysts for the company going forward. So it's an ideal time to buy into the stock. But either way, the company is still going to grow pretty significantly in any direction. It's currently trading at 23 times its EBITDA at all, which isn't really that bad for a fintech company, and is actually relatively cheap for a fintech company. So going forward, if you can get hold of the, as we mentioned, if you can get hold of the bank charter, that adds an extra 25% of EBITDA. That'll make it cheaper and therefore will force the share price up. The bottom line is basically, as I've just said there, it has a very, very strong potential going forward, as I've already mentioned. So moving on from that, where will this company be in about 3 years' time? That is my sort of investing window. I'm a long-term investor in these growth companies. So ups and downs, losing $3 or $4, $5 off stock here and there is no big deal in terms of its, what I'm looking at is its further longer term trajectory. So in 3 years, where could it be? Well, we've just literally had a look at that from 2021 through to 2025, and the share price will be an awful lot higher than $30 a share by 2025. That I have no doubt about it. Just looking at these EBITDA metrics here, which is almost what I've already mentioned, and then once again we have the nice graphic looking here. So that is an absolute ideal opportunity for us to get in early. I know this company was a SPAC, and SPACs are a bit of a boring topic at the moment. Everybody has long since left the building when it comes to SPACs, but this one was a particularly good one to get involved with early doors, that I have no doubt. Getting in at the $10 a share would have been a significant return on your investment. So sitting and being patient, it's an investing game. That's what you have to do. Let the company grow. So is it a buy, sell or hold? A lot of people are saying hold, and this is what this guy is saying in this article. I'm saying it's a buy at these rates. It's not going to fall much lower than that. I think it is bottomed out. There's a strong support line at the $13 to $14 mark, and then should the charter and the Super Bowl happen at the same time in about 30 days time, the stock won't see $13 or $14 again for quite some time, if at all. I'd be surprised if it was below $20 after that point. Then moving on to the last thing that I want to talk about today is the mutual fund, institutional and direct holders in this company. There are loads of well-known mutual funds invested and significantly invested in this company. The Vanguard Total Market Fund hold 15 million shares. Vanguard Small Cap Index Fund hold 13 million. And then there's so many more Vanguard funds and Baron funds, Fidelity, BlackRock, all owning significant positions in this company. Institutionally, absolutely exactly the same. SoftBank is a huge investor in this company, owning 117 million shares, up to 14% of the outstanding float. Then you have Vanguard rearing its head again, Geode Capital, Bamco and Citadel investors. Then moving on from this, we have the direct holders. Some of these won't surprise you. You have Shamath I'm going to massacre his name, so I'm not going to say it. I'm just going to say Chamath there, the multi-billionaire SPAC guy that actually got the ball rolling on this project and led the SPAC through. He still holds a significant amount of shares, so do Accel Partners, Qatar Holdings, Silver Lake Management, and then SoftBank again, sitting there at the top with a huge amount between the core itself and the capital partners, and have been holding them for some for a longer time than others. This capital partners got in on the 18th of November when the share price was particularly. I genuinely believe there are super exciting times ahead for this company, where the Super Bowl is going to happen, which will get its name out there. Make no doubt about it, they're going to be showing the name of the stadium off all over the place. It'll be watched by millions upon millions of people all over the world and all over the US. They'll be probably handing out flyers, handing out big adverts to try and get people to sign out to accounts. It'll be absolutely huge day for the company then, and won't be surprised to see that reflected in membership growth. And then of course we have, if they use that as a catalyst and a bit of a springboard as well, they can announce the charter announcement as well in a similar timescale. That will send this stock absolutely hurtling upwards, I believe. Just my humble opinion, but there's two massive catalysts there that can do the stock particularly well, and that is exactly why I'm still hoovering up shares at the $13 to $14 level, because I think it is an absolute bargain at that point. Yes, it's got a couple of hiccups and issues to get itself back to where it to turbocharge itself in terms of student finance repayments being reinitiated, the lawsuit that it's got, and the bank charter to come through, but they are minor hiccups in what is the upward trajectory of this company. So the option is get in now. You probably won't regret it, to be fair. Thank you very much for watching today, guys. If you could see your way to smashing the like button and subscribing to the channel, that'd be absolutely awesome, and I'll see you in another episode. Catch you later.